Hello and welcome to another update video about Solana. So on the Solana chart, it's worth focusing on the micro today. In the last video yesterday, I shared with you also the 4-hour chart, the bigger picture. But I think it's worth just focusing on the micro here because what we're currently dealing with is a reversal from our trading area here, from this support range. So that's great. However, we need to understand if this is something that is lasting. Yeah, and I tell you what we need to see to confirm that further. So, first of all, we had a, questionable, but still acceptable 5-wave move to the upside into the January highs, here the 30th of January. From the low point on the 23rd of January. Basically, we touched that trading area there, that long-term support area, and we've seen now a 5-wave move. That, again, just as a warning, you know, there are different qualities of movements, different qualities of 5-wave patterns. This is not a high quality one, so that already tells you about the quality of the setup, even though it worked, but also going forward, because this could easily be a corrective wave. Okay, so it could easily be a WXY, so we can easily label it like that. 3 waves, wave W, X, Y. Okay, so 3, 3, 3. That means it could easily be a corrective wave. But I can also count it as, or WXY, you can even count WX and then the Y wave is here. That's all possible. So the main benefit is that we know that is that we just have to be a little bit on the side of caution. And it's not clearly impulsive, so diagonals cannot be trusted. Typically, diagonal patterns can easily be mistaken with those WXY complex corrective patterns. But it doesn't matter so much. Whenever I have a 5-wave move, I give it the benefit of the doubt. We added a support area. Did we know it's holding? Of course not, but it's a viable trade, and the trade would be profitable already now. But is it something sustainable? That's the thing. We need to find that out. So next step. That means we have 3 waves into support. The price reacted to the area between the 38.2 and the 50% fib level. That's quite shallow for a wave 2, but absolutely acceptable. And now, okay, so the next step normally, the first evidence that a correction is complete is a 5-wave structure. So at the moment, I haven't got 5 waves. You can clearly see this is just a 3-wave move. So it could easily be an ABC structure. For example, it's possible to say that this here was just an A wave, this here is a B wave, and we come back into the C wave again, which is why regular profit taking can be so helpful. So what does that mean? That means there is a risk that this is breaking down again, and the risk is high as long as we only have 3 waves up. As soon as I see 5 waves, which we haven't got yet, I can add the next support zone, because what happened here on the larger scale should then happen here in small. In an ideal world, this would find support here, 1 more high, and we have 5 waves. I can then call that again a wave 1. And then I can work with those 5 waves to add the next support area for the wave 2. As I did it here, we can add a support zone, and that could be the next trade setup. There is a condition that the move down must not go below the previous one, and ideally doesn't even get too close. So it's a so-called 1-2 setup. I can only do that as soon as I have 5 waves. Okay, so that's the main. We need to see those 5 waves above initial resistance to confirm a low is in. Okay, first 5 waves, always first level of confirmation. The 3-wave move down, second level of confirmation, and the breakout would be the 3rd level of confirmation. Always depends on how much confirmation you need as a trader. Some traders just already buy in the pullback zone before the next move up has even started. Pullback traders, yeah. So what needs to happen now? So ideally, I added a micro support area. So ideally, the market does not break below 98.50 again, because if we do that, if Solana's bulls cannot hold 98.50, then it already puts very much into question this setup here, or this structure, this 5-wave structure. At the moment, it can easily be an ABC. I need to see now a healthy wave 4. Ideally, it dips a little lower into support because, yep, wave 4 could be over, but is that really a healthy wave 4? It wouldn't even be, I mean, it would be a very short wave 4. Not healthy. Technically speaking, yep, reached the minimum expectations, and I probably would give it the benefit of the doubt if it forms now 1 more high. Either way, I need one more high to confirm a 5-wave move. What I would prefer for clarity is that we get a healthy wave 4, which means that either the wave 4 trends a little bit sideways before going higher, round about the same duration as the small wave 2 there, or goes a little lower, for example, to the ideal target for a 4th wave, which in this case is at $99.46. So that's sort of what I'd like to see ideally, and then this would be an A, B, C structure, and then one more high could be a wave 5 that might reach 103.51, 104.62, or maybe even the breakout point at $107 that we talked about in the last few days. So the main takeaway is it needs to hold 98.52. It doesn't really matter so much what it's doing up here, as long as it's holding that level. Below 98.52, the risk increases significantly that it's breaking down, and I could then still maybe make the case for a diagonal pattern, but again, ideally we see here an impulse that would be the cleanest pattern, that would be the clearest pattern. So if it turns to the upside now, there is a risk that it's still a 3rd wave, because this is too short for a reliable wave 4. So the risk would be it's just an extension of the 3rd. So it just means, again, we need to be on the side of caution. Ideally, maybe even today, or actually at least for the next few hours, it's going to turn, it's going to trend sideways a bit, right? So that would be ideal, or to the 38.2 retracement. So I think the support level is defined, micro support. A break above the $102.50 level, which is the wave 3 high, would confirm the onset of a 5th wave, targeting 103.50, 104.60, or even, yeah, as I said, this breakout point, this red line, which is the neckline of our inverse head and shoulders pattern, where we have potentially here a left shoulder, a head, and a right shoulder. So that's a breakout point here. And a break above that level, if sustained, can send us to $125 plus. Again, in a more bullish scenario, 140, and medium term, even $190. So that's been my communication over the last few days, and yeah, even 1 or 2 weeks. So yeah, that's sort of the idea here currently on the Solana chart. Just want to make you aware of the micro, so you know what we need to pay attention to today. And then obviously, if we see a break below 98.50, it's time to be cautious. And then a break below the $94.65 level will invalidate also a diagonal structure to the upside. That's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.